To the Money Desk, Devin Murrigan joining us once more. And Devin, you know, the big news, of course, of the day is that GDP for the last quarter of 2022 was down. What's 1.3%? It shrunk by, which is really not great news for the economy. But despite that, we are seeing some companies continuing to do well. Nedbank, a case in point?
Yeah, indeed. We also had ShopRite today releasing some good results. It could have been better without the power cuts, but you're quite right, Nedbank, also one of them, declared the highest dividend in its history after reporting strong revenue growth in its 2022 financial year. Now, Nedbank reported a jump of 20% in headline earnings, doing that, as we said, in a very challenging economy. The bank also announcing a 5 billion rand share buyback. Nedbank CEO Mike Brown joins me now. Mike, as always, thanks very much for talking to us. You grew your client base. The bank's revenue grew by 11%. In an economy, we've just learned, that contracted 1.3% in the fourth quarter. It was challenging, wasn't it?
Yeah, it was certainly a very difficult environment. We know, globally, it was dominated by Russia's war in the Ukraine and the impacts that's had on inflation and interest rates and global growth slowing everywhere. And in South Africa, we have quite simply scored too many own goals on top of that, in particular in those key network industries where we rely on state-owned monopolies, Eskom and energy, logistics and Transnet and water. And until we see more progress in resolving the material issues in those industries, it really is not possible for this economy to grow by more than perhaps 1% per annum. And our outlook into 2023 is for very low levels of growth, maybe 0.4% or lower. So a very difficult environment until we make much more rapid progress on structural reform, and that's why we've been so vocal about the need for just that.
Yeah, I mean, the single biggest factor holding back the economy, Mike Brown, power cuts. And now we've got an electricity minister. I'm wondering whether that does influence the urgency or the outcome for a remedy to the country's biggest problem.
Well, for sure, it is the country's biggest problem and biggest risk. And it's clearly too early to tell whether the electricity minister will be the impetus behind reducing levels of load shedding and ultimately ending it sooner, which is why the president says he's appointed him, or whether it will just in fact become even more complicated now amongst 4 ministries to prioritize and execute. And certainly it is too early to tell, but we wish him well in that very important role for all South Africans.
Mike, just turning back into your results once again, your big corporate clients, just given the environment at the moment, are they holding back on their capital spending as a result of weak investment conditions? Can you tell from the transactions of your big corporate clients?
Well, certainly what we see is a mixed outcome. There will definitely be some who are holding back on corporate spending as they are very worried about, as they should be, about the challenges in electricity supply and the challenges in logistics. So, big projects that rely on electricity to generate items that need to be railed to ports to be exported, those will be extraordinarily challenging until we see progress on NECOM's plan for Eskom and Transnet's turnaround strategies. But on the other hand, there are a number of clients who quite simply are upping investment in electricity generation and renewable energy to try and ensure that they can be more self-sustainable. So you do see a mixed bag across our client base.
And that's an interesting point, because the interest income you were earning from loans made a very high contribution to the results, didn't they? And on that note, I mean, are clients taking up an increased number of loans for solar-related projects? Other banks have said they have.
Yeah, so we're definitely seeing very strong interest in, let's call it retail solar and rooftops. We're in partnership with a business there called Home Energy. But there's a real challenge in supply of solar panels, and there's a challenge in qualified people to install those panels. So it's very strong growth, but off a low base. But the real growth, I think, that's going to shift the dials in the short and medium term will be so-called commercial industrial embedded generation. So large corporate clients looking to set up some form of generation to supplement their own electricity supply, and then over time be able to wheel that back into the grid.
Mike, I'm interested in hearing what you have to say about this. One analyst telling us today that perhaps there's some light on the horizon in that front as we pursue, this ambitious goal of getting renewable energy on track. We invest more money in it. It could probably be an upliftment to growth overall. Do you think there's a growth area there when it comes to renewable energy for the economy as a whole?
Yeah, so certainly we do think that it is a pocket of growth within an overall economy that is likely to remain low growth and stagnant, probably somewhere around about 1% at best, until such time as more electricity generation is connected to the grid and or Eskom materially improves the energy availability factor. And, our view is that those are unfortunately still probably 24 months away. So we are in for a very difficult period in the short term, but I do think South Africa has strong growth prospects over the longer term, given the many endowments that our country has. But to access those, we quite simply need materially more reliable electricity supply.
Now, we've got to break through a few other barriers as well. I mean, the grey listing, which relates to the way we tackle money laundering and financial crimes, the international banks that Nedbank deals with, how are they reacting to this?
Yeah, so certainly, for the what they call the correspondent banks, who we spoke to often in the build-up to the grey listing, I don't think it was a surprise to any of them that despite the huge amount of work done by so many people, including National Treasury and the banks, that we were ultimately grey listed. What would be important for them, though, is that none of the reasons for grey listing pointed at the financial services sector. And they do their own due diligence on the banks that they engage with. They are happy with our own anti-money laundering environment. The real challenge for AML in South Africa has been the weakness in investigations and prosecutions. And that is going to be the hardest thing to remedy over the next 12 to 24 months to get off that grey list as quickly as possible. The longer we stay on it, the more damage that it will do to our economy.
I will leave it there. Mike Brown, Nedbank CEO, thanks very much for talking to us.